Ladies and gentlemen, good day and welcome to Himadri Speciality Chemical Limited Q3 and FY26 conference call hosted by MUFG. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Chirag Bhatia from MUFG. Thank you and over to you, sir.
Good evening everyone and welcome to Q3 and 9 months FY26 earnings conference call of Himadri Speciality Chemicals Limited. Today on the call we have with us Mr. Anurag Chaudhary, CMD and CEO, Mr. Somesh Satlanika, EVP, Tires and Strategy, and Mr. Kamlesh Agrawal, CFO. Before we proceed with the call, I would like to give you a disclaimer that this conference call may contain a forward-looking statement about the company which are based on the beliefs, opinions and expectations as of today. Actual results may differ materially. The statements are not the guarantees of the future performance and involve the risk and uncertainty that are difficult to predict. A detailed safe harbor statement is being given on page 2 of the investor presentation of the company which have been uploaded on the stock exchange and the company website. With this, I now hand over the call to Mr. Anurag Chaudhary. Over to you, sir.
Thank you, Chirag. Good evening, ladies and gentlemen. Thank you for joining us today to discuss the performance of Himadri Speciality Chemical Limited for the third quarter and 9 months ended 31st December 2025. We sincerely appreciate your continued interest, trust and engagement with the company. I am pleased to share that we have started trial production of a specialty carbon black expansion project, a landmark achievement for Himadri. With this, Himadri has the world's largest single-site specialty carbon black plant with a total capacity of 130,000 metric ton per annum. This milestone underscores our continued focus on high value-added solutions and marks the beginning of next phase of growth in our specialty carbon black journey. In coal tar pitch, we achieved a key milestone with the commissioning of a Mangalore port terminal, successfully delivering 3,600 metric ton of liquid coal tar pitch to the Middle East. This establishes a second export corridor along with Haldia, significantly enhancing our logistics flexibility and opening up access to new global markets. We are well positioned to cater to rising international demand while offering best-in-class quality at global most competitive prices. Supported by operational excellence, continued improvements in yield and waste heat recovery systems, we continue to drive sustainable profitability. Our commitment to sustainability was once again reaffirmed as EcoVadis awarded Himadri the Platinum Medal for second consecutive year, placing us amongst the top 1% of over 150,000 companies globally assessed on ESG parameters. This recognition reflects our deeply embedded approach to sustainability, anchored in strong governance, climate-conscious operations, ethical business practices, and responsible supply chain management. At the heart of Himadri's performance are our people. We are honored to be certified as a great place to work, a testament to the strong and inclusive culture we have consciously nurtured over the years. The year to date has been marked by steady execution and meaningful progress. We have remained firmly anchored on operational discipline, deepening customer relationships and strengthening institutional capabilities to support long-term growth. This consistency of approach continues to deliver results, reflecting in our robust financial performance with PAT growing 41% year-on-year, with 9 months FY26 PAT exceeding PAT of FY25. As we look ahead, we do so with the confidence what we set out to achieve in FY26 has realized, and the present preparation for future projects are already progressing well, laying a strong foundation for sustained and profitable growth. We have also been actively investing in our rubber, plastic, and coating laboratories to enhance product performance across critical parameters such as ease of dispersion, reduced filter press values, and improved conductivity to lower loading. With the commencement of trial production at a specialty carbon black expansion project, we have significantly strengthened our ability to serve the growing demand of customized and application-specific carbon black grades. This places us in a strong position to address the global requirement for performance-enhancing specialty carbon black used in premium and high-value applications across plastics, inks, high-performance coatings, batteries, paints, wires and cables, fibers, rubber, EV tires, and several other niche applications. In parallel, our recently launched branded naphthalene wall brand Durofresh has received an encouraging response in the retail market, adding further depth to our diversified portfolio. The first of its kind commercial anthraquinone and carbazole facility in India remains firmly on schedule for Q2 FY27. This project reinforces our commitment to innovation and import substitution, while aligning closely with Government of India's vision of Atmanirbhar Bharat, aimed to strengthening domestic manufacturing capabilities. Over the past 2 years, volume and line were largely constrained by operating at peak capacity utilization and dynamic raw material prices. With the start of trial production at a specialty black expansion project, along with debottling of our Kolkata pitch distillation capacity, we now have the necessary headroom to reignite growth in coming quarters and further consolidate our leadership position. Birla Tyre continues to strengthen its footprint across India and key international markets, including Asia, the Middle East, and Africa, supported by a robust and expanding distribution network of 36 distributors and over 640 dealers. Its diversified portfolio now comprises more than 80 products across flagship range such as Kala Patthar, Lobe Max, Ultra Grip, Farm Hall, Platina, San Plus, XLP, LG, Road Mailer, Zeta, B339, Ultratech, and many others. Engineered to deliver superior grip, mileage, durability across varied customer applications, the team at Birla Tyre continues to scale in both capability and size, with modernization initiatives progressing well to enhance offering across of the highway tires, commercial vehicles, agriculture, industrial segments. For passenger car radial unit designed specifically for EV and SUV, installation of plant and machinery is being planned. This will position Birla Tyre to participate meaningfully in fast mobility segment while complementing Himadri's broader strategic ambitions. The most transformational chapter in Himadri's journey is our entry into battery materials. Lithium-ion batteries represent a structural shift in global energy consumption, and anode and cathode materials together constitute for 65% of the total battery cell cost, making materials innovation centered to long-term value creation. On the cathode side, we are focused on lithium-ion phosphate, a chemistry gaining rapid global acceptance due to its safety, longevity, and cost efficiency. Our long-term vision is to build 200,000 metric tons of LFP cathode active material capacity in phases, catering to approximately 100 gigawatt-hour of battery energy demand. The first commercial phase of 40,000 metric tons per annum remains on track for Q3 FY27, positioning Himadri at the heart of e-mobility ecosystem as the first commercial LFP active material plant globally outside China, serving both domestic and international markets across mobility and energy storage applications. On the anode side, our strong legacy and deep expertise in carbon chemistry provide a clear strategic advantage. We are one of the only companies to have backward integration in terms of raw material availability. Intense research and testing are underway as we progress steadily towards development of comprehensive spectrum of anode solutions, including synthetic, natural, hybrid, and silicon carbon-based technologies, thereby strengthening our capabilities in this high growth and strategically critical domain. As Himadri writes the new chapter in the Himadri Reloaded phase, we continue to expand across multiple high-value categories. While specialty carbon black, coal tar pitch, and specialty oil naphthalene remains at our core, we are actively expanding our product portfolio and making sustained investment in research and development to support future growth. At Himadri, R&D is not a department, it's embedded in our DNA. It shapes how we think, operate, and deliver value. Over the years, we have built a global R&D ecosystem, bringing together exceptional talent, including PhDs and subject matter experts from USA, Japan, South Korea, China, South America, Australia, and Europe. This rich techno-cultural diversity fuels innovation, agility, and a forward-looking mindset, enabling us to lead in new technologies and product developments for emerging and sunrise industries. Our commitment to innovation is further strengthened through strategic investments in Sicona, IBC, and Invati, which have enhanced our technological depth, accelerated our innovation pipeline. With the strong synergies between our innovation and research team, we are not only collaborating on new developments and emerging technologies, but have also been leveraging shared expertise to adopt best practices and strengthen our processes across our core verticals. Together, we are developing a sustainable growth engine that is paving the way for a portfolio of innovative products built on cutting-edge technologies. These collaborations have enabled us to establish a strong joint product development map that leverages our collective expertise across cell chemistry, battery science, material technology, and operational excellence. Our shared focus is on developing solutions grounded in principles of sustainability and circularity for sunrise sector such as high performance and high value-added defense applications, drones, AI data center, mobility, and many more. Today, R&D at Himadri goes far beyond product development. It is about advancing technologies, transforming processes, and unlocking new possibilities to keep us ahead in a rapidly evolving global landscape. In parallel, we continue to actively leverage artificial intelligence and digital tools across work streams, procurement, logistics, inventory, material management, quality management, sales and marketing, and manufacturing to sharpen execution, improve predictability, and build a more agile, data-driven operating model for the future. This year marks a defining chapter in Himadri's journey, characterized by progress, resilience, and purposeful execution. The path we envision is unfolding with clarity, and we continue to build on that momentum with confidence. As we look ahead, the horizon is bright, filled with opportunities that will take us to greater heights and unlock new possibilities. Together, we are shaping a future of sustained growth and innovation. Before concluding, I would like to express my sincere gratitude to our colleagues, partners, and investors for their continuous trust and support. With this, I hand over to our CFO, Mr. Kamlesh Agarwal, who will take you through the financial performance in detail. Thanks. Kamlesh, please.
Thank you, Anuragji, and good evening, everyone.
I'm sorry to interrupt you, sir, but your voice is breaking.
Now it's okay?
Yes, please go ahead, sir. Now.
Yeah. Thank you, Anuragji, and good evening, everyone. I trust you have had the opportunity to review our financial results, the latest investor presentation, and press release, all of which have been made available on the stock exchanges and on our company's website. Let me now take you through the financials for the quarter and 9 months ended 31st December 2025. On a standalone basis, we are pleased to share that we have already surpassed our full year FY25 PAT within the first 9 months of FY26. This outcome clearly reflects the effectiveness of our strategic focus.
I'm sorry to interrupt you, sir, but again your voice is breaking.
Hello? Now it's clear?
Yes, sir.
This outcome clearly reflects the effectiveness of our strategic focus on value-added products, which continues to be the key driver of profitability and margin expansion. From a quarterly perspective, in Q3 FY26, standalone revenue stood at rupees 1133 crores. EBITDA was rupees 249 crores, registering a 12% year-on-year growth, while profit after tax came in at rupees 195 crores, reflecting a strong growth of 37% year-on-year increase. These results underscore the consistency of our execution despite a dynamic operating environment. Looking at the cumulative performance for 9 months FY26 on a standalone basis, revenue stood at approximately rupees 3,304 crores. EBITDA increased to rupees 726 crores, representing a 19% year-on-year growth compared to rupees 611 crores in 9 months FY25. Profit after tax stood at rupees 564 crores, marking a 41% year-on-year growth over approximately rupees 400 crores in the corresponding period last year. Now turning to our consolidated performance in Q3 FY26, revenue stood at rupees 1,184 crores with EBITDA at rupees 253 crores compared to rupees 225 crores in Q3 FY25, reflecting a 12% growth. Profit after tax rupees 122.
I'm sorry to interrupt you, sir. Again, voice breaking.
Yeah. After that,
sir, again it's breaking.
So, am I audible now? Now my voice is clear?
Yes, it's clear now.
Profit after tax came in at rupees 192 crores, registering a growth of 36% against rupees 141 crores in Q3 FY25. For 9 months FY26, on a consolidated basis, revenue stood at approximately rupees 3,373 crores. EBITDA was rupees 726 crores, reflecting a growth of around 18%, while profit after tax stood at rupees 548 crores, a 37% increase over 9 months FY25. This performance highlights the strength and resilience across all the business segments. From an operational perspective, our sales volume for 9 months FY26 stood at 428,072 metric tons as compared to 415,000 metric tons.
I'm sorry to interrupt you, sir, but again your voice is breaking. No, we can't hear you properly, sir.
So, let me take it over. Anurag here.
Sure, sir.
Kamlesh, let me take it over. Am I audible?
Yes, it's loud and clear from your end, from mine.
Yeah. From an operational perspective, our sales volume for the 9 months FY26 stood at 428,572 metric tons, as compared to 415,679 metric tons in the previous year, reflecting a growth of 3%. EBITDA per metric ton stood at 16,934 in 9 months FY26 compared to 14,707 in 9 months FY25, representing a 15% improvement driven by product mix that remains increasingly focused on high value-added offerings. I am also pleased to share that during the quarter, the promoters have further strengthened their stake in Himadri through conversion of 1 crore warrant into equity. The warrants are acquired at a total price of 316 per warrant. Promoter shareholding now stands at 52.5%. This development underscores the promoters' continued confidence and long-term commitment to Himadri's growth journey. Strengthening promoters' stake not only enhances the company's capital structure but also demonstrates the immense faith in our business as we embark on the next phase of expansion and value creation for all our stakeholders. Overall, these results reinforces our confidence that Himadri is well positioned to continue its upward journey and trajectory, supported by a strong financial foundation, disciplined execution, and a clear strategic direction. So now, Chirag, we can open the session for question and answer section. Yes.
Sure. Thank you so much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Divyansh Thakur from Finterest Capital. Please go ahead.
Sir, congratulations on the great set of numbers. So we have mentioned the roadmap to grow and accelerate towards 2028. So how do we vision that? How do we scale it up? We start our operations for the phase 1 cathode in quarter 3. We have also built our tires gradually ramping up. So how do we see the coming years and how do we can shape the development for the company going ahead?
Thank you, Divyansh. So if you look at the profitability achievements for FY24, we achieved a PAT of 411 crores. And in FY25, we gave a guidance that in next 3 years, that is by FY27, will double the PAT, effectively 800 crore plus. But if you look in FY26, we are already nearing to the target. So now FY25, we had a PAT of around 558 crores. With all these projects coming in, with new capacities coming in, value-added products coming in, we are confident that the profit will again double from FY25 to FY28 in 2 years from now.
So what you are saying is that the PAT level of FY25, when we'll see the PAT level of FY27, it will double. Am I right?
FY28.
Okay. FY28.
It will double also the to 1100. So we are giving the same guidance what we gave 1 year back. We are giving the same guidance which we gave 1 year back when we articulated that PAT will double in 3 years. Same thing we are saying again now. 1 year fast forward, the PAT will double again in 3 years from FY25 to FY28. Only one disclaimer is that last time when we told it will be done, it was done in 2 years instead of 3 years.
That's great, sir. Sir, also I wanted to get a look out on how the cathode materials operations that are coming. I think this is the first one in India to come up, and also there I saw some headlines that you are in talks with some large players. So if you can give some more information on that.
So definitely. So in terms of cathode, our pilot plant, demo plant is under construction and expected to be commenced in the 4th quarter. And post that, we will be sending sample B to our customers. There are a series of samples which need to be approved by the customers. So next stage of sampling will start.
So can you name some customers?
Hello.
Hello, am I audible?
Yeah, you are audible, please.
Sir, can you name some customers?
No, we cannot name some customers. The global customers plus India customers, we have NDA, so we cannot disclose the names on public forum. And regarding the capacities for lithium iron phosphate, so we expect FY29 to be the full year of operation for lithium iron phosphate.
Okay, that's great, sir. That's all from mine and all the best for the coming quarter.
Thank you.
Thank you. Our next question comes from the line of Dhruvin Kadakia from SKP Securities. Please go ahead.
Hello, sir. Congratulations. Great set of numbers. So I just wanted to begin with three small questions on our quarterly results, and then I'll join with you. My first question is, sir, with regards to our EBITDA per ton, sir. So in this particular quarter, when I did my calculations for EBITDA per ton, I have noticed that we've seen a decline on a sequential basis. Despite our revenues, etc., which has seen a growth. So I wanted to understand the reason behind it. Second, I wanted to understand the sporadic increase in the total income, in the other income, sorry. Other income has almost grown by 290% on a year-on-year basis. And the last question would be with respect to what are the tire sales that we've made for this particular quarter. That's all.
So regarding EBITDA per ton, if you look at it, it is more or less in line because depending on quarter to quarter, the number changes, but it's very minimum. So that is the level where it is more or less stabilized now. For other income, so we have made investment in IBC, in which we have got that investment at a comparatively much lower cost. So some valuation has been done as per accounting standard, because of which there has been some increase in the other income. Other than the investments that we have made, so if you look at, we have borrowed significant amount of money. At the same time, we have invested in banks, so that interest is also there.
Okay, sir. And last was regarding tire sales for this particular quarter. Like, where do we stand currently, and how much do we expect to end the year in terms of our Birla Tyres, revenue-wise?
So revenue-wise, we have the current quarter, we have already achieved 60 plus crores of revenue. And looking forward, we expect the momentum to strengthen further. And this, from the next year, you will see capacity ramp up taking place in Birla Tyres.
All right, sir. Thank you so much. I'll join the queue. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question comes from the line of Smaran from Money Stories Asset Management. Please go ahead.
Hello, good evening, team. So my question was regarding the cathode capacity that we are targeting. So since we are targeting to cater about 100 gigawatt worth of cathode, so is it that we expect a huge market share in India and globally, or is it that we are trying to capture the huge size of a small market share?
Your question is not clear. Can you repeat it, please?
Okay, so I was asking about the cathode capacity which we are targeting, which is about 100 gigawatt worth of gigawatt per hour, which we are targeting, right? So is it that we are expecting a huge market, or is it that we are trying to capture a huge market share? So I wanted to understand which one is it.
So it's not that we are going to capture huge market share. FY30, the global lithium ion cell capacity will be 8,000 plus. And by that time, we are only targeting 100, which is absolutely nothing in terms of global demand. So actually, first time Himadri is going to be in a product where demand will not be a constraint. So growth will depend upon our ability to expand. So this will be a unique positioning for the company.
Okay, got it. And how do you place ourselves in terms of cost competitiveness within India or else comparatively to China as well?
Will be very much cost competitive to any geography in the world.
Okay. Just one last question was that how are you planning on your sourcing of raw materials for the lithium and phosphate?
How much?
How are you planning on sourcing the raw materials for the cathode part of it?
So we'll be sourcing from the global market, including Latin America, Australia, China. So wherever we get the best rates, we'll get the raw materials from.
Okay. Thank you. That's all from my side. All the best.
Thank you. Our next question comes from the line of Pratik Shah from Investing Alpha. Please go ahead.
Hello. Hello, sir. Am I audible?
Yes, sir, you are. Please go ahead with the question.
Yeah. Thank you for the opportunity. So my first question is, on the post-recent warrant conversion, how does management view equity dilution going forward? Like, will future growth be primarily debt-funded or accrual-driven?
So the entire growth which is going to come for next 3-4 years are from internal accrual. So there is going to be no dilution as far as Himadri is concerned. So if you look at the shareholding also in last 3 years, we have increased our stake by 10%.
Right.
So don't see any dilution coming forward, and there will be no debt which will be taken. It will be internal accrual.
Great. Great. Okay. And so my second question is, what are the key execution risks during the ramp-up phase at Mahistikry, and how is management ensuring that quality consistent is maintained while scaling volumes?
We have a very strong SOP for the projects and for operation. So which ensures that under no circumstances there is any impact or contamination from the ongoing projects. It ensures there is no problem as far as the quality or consistency is concerned.
Okay. Got it. And so one last question. Historically, how long has it taken for Himadri to ramp up specialty capacity to, optimal utilization? And should we expect similar or shorter curve for the new facility as well?
Yes, definitely. To ramp up to the capacity, it will take around 3 to 6 months.
Okay. Okay, got it, sir. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Our next question comes from the line of Ishani Jain from MAS Capital. Please go ahead.
Hello, sir. My question to you is with energy being a significant input, so what proportion of power is sourced internally or through long-term agreements, and how does this influence margins?
So we source 100% of power through our waste heat gas capturing plant, where we convert gas into power. So Himadri is using clean power for all its operations.
Okay, sir. Got it. Also, at what stage does management gain confidence to commit CapEx in energy materials? It means post customer qualifications or post binding offtake agreements?
We don't wait for binding offtake agreement. We have full confidence in our quality and our customer relationship. So with the qualification, we start setting up the capacity. So qualification is in process. In the same time, we are setting up the capacity. Because unless you have the full commercial plant, you will never get approvals.
Okay, sir. Also, my last question will be, in specialty carbon black, how much of the recent pricing has been formula linked versus a negotiated contract?
So it depends on customers to customer. I cannot disclose the pricing policy, but I can tell you specialty carbon black has a much better margin than commodity black, and Himadri specializes in this segment.
Okay, sir. Got your point. Thank you.
Thank you.
Thank you. Our next question comes from the line of Viraj Sanghvi from Asit Koticha Family Office. Please go ahead.
Am I audible?
Yes,
Yes, sir, you are.
Yes. So we have seen some fall in EBITDA per ton on quarter-on-quarter basis. So is this to do with some change in product mix? Because we have also expanded the coal tar distillation capacity by 1 lakh metric tons. So is that the reason there is some fall in EBITDA per kg?
Viraj, if you see, there is a hardly means it was 1,700, 900, it has come to 16,000 something. So there has not been much difference. So you will find this kind of variation on a positive or negative side on a quarter-on-quarter basis. But this doesn't have any significant importance or significance.
Okay, got it. And this coal tar distillation facility that we have expanded by 1 lakh metric tons, what is the utilization for that in this quarter?
No, this we have just started. So over the next 2 to 3 quarters, you will see the ramp up happening. So it will take like Q1 FY27, you will see the ramp up happening.
Okay. And what about the specialty black capacity that we were to expand from 60,000 to?
The next financial year, you will see the ramp up happening from the next financial year.
Okay.
There will be some ramp up happening, but you will see the full results coming from in the next financial year.
Important. And from the Birla Tyre business, what sort of EBITDA margin are we making on the 60 crore revenue for the quarter?
So currently since we are selling, so we have a partnership with Dalmia Refractory Bharat Limited in Birla Tyre. So in Himadri Clean Energy, we are buying from Dalmia Refractory and selling the Birla tires. So we don't have any positive or negative impact as such as of now. But looking forward, the things will change.
Oh, okay. Got it. That's it from my side.
Thank you. Our next question comes from the line of Animesh Jain from Dalal & Broacha. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. I just wanted to understand that with the fluctuations that are expected in lithium prices going forward, how do we see that affect our margins? Will we be absorbing those or will we see that as a pass-through for us? Yeah, thank you.
See, the kind of fluctuation which is there in lithium, it can never be absorbed. So all the customers will be having a pass-through model in which the pricing up and down will be transferred to the customer. Same business model we follow with our existing products also, like for coal tar pitch or carbon black. So same will follow for lithium also.
Okay. So that would be a full pass-through, right?
Yes, it's a full pass-through.
Okay. And so my next question would be on our cathode facility, how would we see utilizations going forward for the next 1 or 2 years?
So next 1 or 2 years, there will not be significant utilization. I see utilization coming in. Some utilization will be there in FY28, but yes, big utilization will come in FY29.
Okay. And then 29, what kind of asset turn?
If you ask me FY29, I see full capacity utilization.
Okay. So what kind of asset turn would we be looking at full capacity utilization?
2+.
All right. Okay. Thank you, sir. That's it.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of Dhruvin Kadakia from SKP Securities. Please go ahead.
So my question was regarding our traditional, the coal tar pitch business. So just wanted to understand from an industry perspective or from a business perspective, how do you expect them going forward? Like, is it becoming structurally declining, or do you still see it like a very significant growth driver for your cash flow generation?
See, that model has really matured over the last 5 years, and we expect the business to have sustainable profitability because we have done a lot of work in terms of operational efficiencies, uh, waste heat recovery system, improvement of yield, and these are giving us long-term sustainable profitability.
Okay, sir. My last question would be regarding to our recent specialty carbon black expansion that we've done. Just wanted to understand, like, on a year-on-year basis, what is the trend of this capacity utilization? Like, on a year-on-year basis, how do we expect this capacity utilization to increase? If you could give, like, a 1, 2, 3-year breakup, if possible.
So for the next year, you can look at around 85% capacity utilization for specialty carbon.
Okay, and post that we are on, like, almost 95-100% type.
Yes.
All right, sir. That'll be all. Thank you so much.
Thank you.
Thank you. Our next question comes from the line of Preeti Agarwal from SKS Associates. Please go ahead.
Yeah, thank you so much for the opportunity, and also congratulations on the new Mangalore port. I wanted to know that is this new port going to focus on Middle East itself, or can we, expect more geography diversions such as Africa?
So this will be mainly focused on Middle East only because of the proximity to Middle East, and for the other geographies, we already have Haldia port to cater to that.
Understood. And the research and development investments remain elevated. So how should investors assess returns on this spend? Like, are there defined KPIs or commercialization timelines that are being targeted?
The R&D has been the core of the company for years now. So we are one of the companies in India who spend a lot of money on research and development and innovation. This has only brought us to a place where we are in terms of, not only product, process and technology, but it goes much beyond that. So for Himadri, we are working on many new products. And in next 1 year to 2 years, we'll see a lot of new announcements for commercialization coming in for high value added products. So in our case, R&D is not only a academic thing with no KPI. We have defined in our R&D, we have defined the performance metrics in a very articulated manner, which means within a given time frame, you have to achieve a particular result. And it cannot be ever-ending project. And that is the biggest strength of the company. All our technologies in Himadri has been developed in-house. That's the beauty of the company. We have not bought any technology from any technology supplier for any of our products. So looking forward also, you will come across a lot of new products coming in next 2 to 3 years.
Good. And also, can you give an update on the new tire launch on Birla tire segment? Like, are we diversifying from the passenger car radical? And also, what is your long-term plan for this?
Birla Tire currently is not into passenger car tires. Birla Tire basically was into TBB segment, buyer segment, and little bit in agriculture, and has some position in mining tires. So what we are doing, we are strengthening and expanding our OTR and OHT segment. Idea is that over the next 3 to 5 years, we will have significant presence from Birla Tyres in these two segments. And that is how we are revamping, modernizing, making automation, getting new machineries, getting the right people, all the resources in place in Birla Tyres. In addition to that, in future, we will be launching passenger car tires, which will be focused on SUV and EV.
Understood. Yeah, that's it from my side. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on the touchtone telephone. Our next question comes from the line of Rohan Baranwal from Arihant Capital. Please go ahead.
Hello. Sir, as you shared the details on the demand of cathode
Actually, sorry, my line got disconnected. I was not able to listen to your question. Can you please repeat it?
Sure, sir. My question was on the side of cathode, sir. So share the details on the demand of globally and domestically. So what is the demand scenario on the anode side, sir? Like on the global, you share it, but is the expectation domestically anodes and materials?
Your question is on cathode or anode?
Sir, like what is the demand expectation for anode domestically, sir?
Anode, not cathode.
Yes, sir, anode.
So see, Himadri is positioning itself in a new age industry. For the first time, we are going to be in a business where demand will not be a constraint. See, till now, we have been in an industry where demand has always been the deciding factor for our expansion, and that's the limiting factor. When it comes to lithium-ion cell industry, so the growth is exponential. And in the next 3 years, there has to be significant growth in terms of cell manufacturing capacity. And first time in our entire career that we are going to address a market where demand will not be a constraint for either anode or cathode. Anode consumption will be higher than cathode only because LFP, I am talking particularly. In terms of absolute volume, LFP cathode is 2 times of anode. But anode is used in all the chemistries, unlike cathode. Cathode has different chemistries like CLA for electronics, NMC is part of the chemistry, then LFP is there. So each chemistry has their own market share. LFP market is increasing every day. But cathode remains constant throughout this chemistry, whichever chemistry is being used. So anode is constant. So anode demand is very strong in India and globally.
Okay, sir. And sir, my second question was more on the quota dates, sir. So you've done your first shipment to Middle East. So we can see the demand from Middle East side to be strong. What is the scenario in the other parts of the world, like Europe, West, sir? As we see, European region has faced like energy cost crisis, and because of that, the peer companies like was so how you are able to benefit from this?
We are not at all focused on European market. We have clean focus on Middle East market because after China, Middle East is the single largest manufacturing base for aluminum industry. And Himadri is well positioned to cater to meet their requirement. So our focus is clear. We don't want to go to Europe as far as coal tar pitch is concerned.
Got it, sir. That's all. Thank you.
Thank you. Our next question comes from the line of Disha from Sapphire Capital. Please go ahead.
Hello.
Yes,
Disha, please. Yes, you are.
Yeah. So sir, for this battery expansion that we are planning, what sort of EBITDA margins do we see here, and how does that differ from our regular business?
See, for looking at Himadri, I'll give you a very, basic thumb rule. What we look at in our company at board level, that we have, what is the return on capital employed? If you look at my existing business, the return on capital employed is 34%. So capital allocation is very, very critical and important metrics for us in Himadri. So we do not allocate capital to any business where ROC is less than 30%. That is the main objective. And basis that principle, all our investment is guided.
Okay, got that. And for this phase one, I think is coming by Q3 FY27, right?
Yes. But don't expect any ramp up or capacity utilization in next 1.5 years.
Okay, so then I think from beginning FY29.
FY20, yeah. That's what I gave a clear guidance. FY29 will be the year for LF.
And how much are we ordering of capex that we expecting to phase one?
1125 crores.
1125 crores. And asset turn of around, I think you said more than 2x, right?
2 plus.
Okay. That's it from my side. Thank you.
Thank you.
Thank you. Our next question comes from the line of Yashwant Gotipati from KR Choksey Securities. Please go ahead.
Hello, am I audible?
Yes,
sir, you are.
Yeah. So, good evening, sir. My question is regarding anode materials. So, if you can give us the numbers for the capex that we are going to, undergo for this anode material development, what is the capacity and what is the premium which, we'll be charging over for products such as the performance-driven anode materials. So, if you can throw some light over that whole anode project.
I was not able to listen to your question. My line got disconnected. Can you please repeat it?
Okay. So my question was regarding the anode materials project. So if you can give us some numbers regarding the capex for that anode material development, the capacity which would come live, as well as the premium which we would be charging, a rough estimate, for anode materials over the normal synthetic or composite graphite.
See, first of all, we have not announced any capex as of today on anode material. So we are in the process of finalization. Once we finalize, we'll come up with the capacity number and the capex numbers.
Okay, understood. And roughly, sir, the premiumization, how much percentage would be, a ballpark number for carbon silicon composites which we would be catering to performance-driven applications over the cost-driven applications?
So there is no point discussing the premium. As I told you, because knowing the premium, you will not be able to calculate anything unless you know the capacity and. So you can Google it and you will get the selling price of silicon carbon compared to synthetic carbon anode material.
Okay. Understood, sir. Yeah, that will be all from my side. Thank you.
Thank you.
Thank you. Our next question comes from the line of Devanshi Shah from HUF Capital. Please go ahead.
Hi, thank you for the opportunity. So I wanted to understand how does Himadri's cost structure and technology roadmap compare with established Chinese players in LFP and anode, and where does the management see its competitive moat?
See, in China, if you look at LFP chemistry, it has really evolved over the last 5 years. The work has been going over the last 15, 18 years, but the ramp up of volume has taken really place in last 4 years. And the advantage of Himadri is that we have been in this industry for last 17 to 18 years. If you go back and look at our annual reports, we have been talking about lithium-ion batteries from the day when no one was even knowing about lithium-ion batteries. Not much people were knowing. So that time we had a vision that lithium-ion battery is something which is going to be a game changer for future. There were many chemistries. The best thing is there are many chemistries. But at that point of time, 18 years back, to point out that yes, this chemistry is going to be a game changer is a big thing. Today, everyone can say, but 18 years back to tell this thing was a big thing. So that is what we did. And I have been personally engaged and very closely monitoring the development of raw material component of this industry over the last many, many years. So I have very strong relationship and very strong team which is working on it, and we are absolutely confident will be very strong in terms of our quality of the product, specifications to meet the requirement of the customers, and very much competitive. Plus, we have the India advantage compared to our peers in the other geography.
Right, sir. Got it. That was helpful. Also, could you share insights on demand trends across key export geographies such as Europe, US, Asia, particularly in the context of global industrial slowdown and inventory normalization?
See, by the time our product comes, all the inventory normalization, in fact, in LFP has already happened. If you see the correction of lithium-ion prices has corrected 75% over the last 2.5 years, 3 years, by 75%. So all inventory, write-off, correction, all those things has already happened. There's nothing left to be corrected. So now there will be fair competition which is going to be there, and global demand is the global capacity of lithium-ion battery cells is going to be around 7,500 to 8,000 gigawatt hour from current 2,500. This gives a huge possibility for huge ramping up of capacities and huge demand for cathode and anode material. And company will be producing the best in quality, meeting all the global standards, will outline others. That is coming out very clear, because the single factor for meeting the requirement of this huge growth which is coming will be the raw material component. So everyone is cell capacity, but raw material is limited. So that will be a critical factor, which will be the game changer. And Himadri has what makes Himadri different, and in terms of lithium-ion capabilities also. If you look at our R&D setup, we have joined hands with Sicona, having facility in Australia. Our team is working hand in hand with the Sicona team for new developments. We have taken a stake in international battery company headquartered in California, having a state-of-art AI-based research and development center in California, and a manufacturing facility in South Korea for cell manufacturing. And they are working on Himadri components for making cells. So they have already launched double 1000, a prismatic shaped cell using NMC and anode material. Now they are going to launch double 2000, which is using Himadri anode material and Himadri lithium-ion phosphate. So this gives Himadri a unique positioning compared to any of the peers globally, where we don't have only the laboratory capabilities. We have the full-fledged cell manufacturing facility available in South Korea, where you can practically see the cell being manufactured. So it's no longer a laboratory type thing we are talking. In addition to that, double 3000 will be launched, which will be using silicon carbon made by Himadri. So this gives Himadri a unique positioning and the first movers advantage in this industry. Being in this industry for so many years, it's not that today everyone is talking about lithium-ion batteries, so we have started lithium-ion batteries.
Got it, sir. Understood. Thank you very much and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would like to hand the conference over to Mr. Anurag Chaudhary for closing comments. Thank you, and over to you, sir.
Thank you, Chirag. Thank you everyone for joining the Q3 FY26 9-month conference call of Himadri Speciality Chemical Limited. We appreciate your time, continued interest and engagement, and hope we have addressed your queries satisfactorily. At Himadri, our focus remains firmly on creating sustainable long-term value for all our stakeholders. We are deeply committed to our transformational journey, driven by high-quality products, disciplined execution, and an unwavering emphasis on innovation, environmental responsibility, and health and safety. We are confident that the strategic direction outlined today will continue to support resilient growth and deliver enduring value. Before we conclude, I would like to once again thank our team members, partners, investors for their trust and continued support. Should you require any further information, please feel free to reach out to our investor relationship advisor, MUFG in time IR. Thank you. Have a good day.
Thank you, sir. Ladies and gentlemen, on behalf of Himadri Speciality Chemical Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.